Hello, Maverick traders. This is Imri, and welcome to another episode of Maverick Psych Corner. Today's topic of discussion will be chasing perfection, the pursuit of the Holy Grail. Now, as we get into this topic, I just want to say, in my opinion, this is quite possibly the most important thing with regards to trading that I could ever talk about. The Holy Grail is a concept which largely speaking is pretty mythical in nature. I don't think the Holy Grail really exists the way that most traders think it exists. Instead, I think the Holy Grail exists as a concept, which we're going to be digging into today. The reason I think this topic is so important is because if you can understand what is the quote unquote real Holy Grail of trading, it's likely going to shift your approach to trading financial markets in a very fundamental way. All right, so this is the Maverick key concept. There is a huge difference between analyzing a market, forecasting a market, and trading a market. The vast majority of traders out there focus almost entirely on analysis, and they think that because they're working on analysis, they're working on becoming a better trader, right? Most people think that if they can just figure out where the market is going next, then they'll be able to bank consistent profits, right? Now, whether that's putting together the perfect mix of indicators to tell you whether the market's going up and down, maybe it's a more discretionary means of analysis, maybe it's quantitative or fundamental. The bottom line is that where most traders tend to focus their time is on figuring out where the market is going. And that is important. But knowing where the market is going is not going to translate into profiting from that analysis. Some of my best trades have come off the backs of analysis, which turned out to be completely wrong. And I've lost money on more trades than I can count where I nailed the direction where the market is going. So the hard truth is that simply being able to master where the market is going and thinking that's going to translate into good, consistent trading is just nonsense. Analysis and trading are two completely different skills. I like to say that analysis is a mastery of observation, whereas trading is a mastery of the self. So this is my Holy Grail of trading, keys to successful trading. So I've got 4 key points on here. First is having a method, making a plan. We preach this at Maverick until we're blue in the face. You must have a trading plan. Now, what makes a trading plan good is that your methodology must be objectively definable. Any decision-making opportunities should be clearly explained. Okay, so one good criteria for whether or not you have an objectively definable plan is if you hand in your plan to another qualified trader in Maverick, and that trader should be able to trade off of your trading plan. Your decision-making process should be so clearly outlined that someone else should be able to follow it in theory. Okay, and most importantly, that method shouldn't change on a regular basis. This is a very common illness that I see in traders, and I call this sickness strategy hopping, and it really is a disease where people will trade a certain method for a month or so. It doesn't work. They go looking for another method, and their mindset makes sense it does make sense on a superficial level. If my strategy is not working, I need to find a strategy that does. Once I find that strategy, I'm set to become a consistently successful trader. That is a very dangerous way of going about trading, and I've never seen that process actually result in a consistent degree of success for any trader, right? So you must have your trading plan laid out in great detail before you even think about placing any trades. There must be a method. Now, a method is no good unless you have the discipline to follow that plan. If you want to be consistently successful as a trader, consistently profitable, the only way to get there is by being consistent with all of your trading behaviors. Consistency with your behaviors will lead to consistency in your trading results. Now, that consistency in your trading results could be either good or bad. If you're consistently making poor decisions, letting your emotions control you, for example, then the outcome is rather predictable. On the other hand, if you can follow your plan in a well-disciplined manner, the odds are much higher now that you're going to see success consistently in your trading. Now, one of the ways that we can make discipline work for us, and we're going to talk about this in a little bit more detail shortly, is to build a method, build a trading plan that suits your personality to begin with. For example, I know that I'm prone to wanting to make very impulsive trading decisions. I want to jump in. I want to be aggressive and to be early. And I know that that is quite possibly my biggest unique personality weakness. So to kind of circumvent that or to mitigate that weakness, I'm primarily a swing trader. And the times that I do trade intraday or that I scalp are so clearly defined that it's immediately obvious to me if I'm straying outside the boundaries of my well-defined plan. All right, the next key to successful trading is experience. You simply have to put in the time. There is no substitute for handling real money. Yes, we have simulator trading. Yes, we have demo trading. And those two, I'd say, pre-trading activities are fantastic for helping you with analysis. Demo trading is fantastic for helping you learn how to use our trading platform. And yes, to a degree, live trading and demo trading are similar in many respects, but there is one big difference between trading with real money and paper trading. And that difference is that there is something on the line when we're trading live. And when there is something on the line, especially when that something is money, it starts to affect our decision-making on an emotional level. And that's why I say, at a certain point, if you're the kind of guy that is chasing perfection, or gal, if you're the person that is chasing perfection in your trading, and I have some of those traders that I work with where, a year and a half, 2 years later, they still haven't made the jump to live trading. They're still demo trading. That is dangerous. It's dangerous because perfection doesn't exist. And again, we're going to talk about chasing perfection in a little bit more detail later on. So at some point, you do have to make that controlled leap into live trading. Now, we have to be absolutely prepared for live trading, no question. But I've never seen it where a trader thinks they're 100% prepared, and because of that preparation, they're going to expect immediate, amazing success. No, it will still take time. That's why we have graduated levels in our capital sharing program. It's to help traders make that transition from amateur to pro. And finally, the fourth key to successful trading that I have here is emotional control. Being able to handle wins and losses, right? I hear about people talking about handling losses a lot. What I don't hear so much is people talking about being able to handle wins. So that's going to be a very important part of today's presentation. Now, simply said, losing is an essential part of being a trader. Now, the other side of that coin is obviously winning as well, and being able to handle huge wins is crucial. Emotional control, emotional discipline, whatever you want to call it, is very much like walking a tightrope, and balance is essential. Otherwise, you will fall off that tightrope. All right, let's get into developing a method, trading plan development. So like I said earlier, your trading plan, your method has to be objectively definable. Can you explain every single step in your decision-making process, from market analysis to allocating capital to managing a trade to completion? Now, I mentioned perfection. Perfect doesn't exist. A perfect strategy is the holy grail that so many traders waste so much of their time on. I primarily see this more in those traders that are pursuing a kind of algorithmic strategy where they're looking at combining a number of different indicators, testing indicators. I'm not saying those methods don't work or that they do work. What I'm saying is that at a certain point, you cross this kind of Rubicon where the results and the returns you're going to get from trying to perfect the system are so small. You're trying to make marginal gains and improving your system. You'd be better off simply trying that system out in live markets and seeing if it performs according to your statistical expectations. So the data that you've gathered in simulator trading and in demo trading. Okay, so perfect doesn't exist. Now, what's insidious about the chase of perfection is that you could talk to a perfectionist that happens to be a trader and they'll acknowledge, I know I'm not going to win 100% of the time. But what's underneath that iceberg is that there's kind of this expectation that maybe I can win 80% of the time. Maybe I can win 85% of the time or 90% of the time. It's highly unrealistic and, in fact, detrimental to try and pursue such a high win rate. What's far more realistic is to aim for a win rate, I'd say anywhere between 35 and 55%. That is a solid win rate, a very good win rate. And win rate is only part of the equation of a successful trading plan or trading strategy methodology. The other part of that equation is the profit factor, your average risk reward per trade, right? That is something that traders tend to focus less on. They tend to focus more on the win rate, right? So regardless of whether you're aiming for the best risk reward strategy in the world or the highest win rate in the world, the bottom line is that perfection doesn't exist. The goal should not be perfection, it should be profitability. Now, that being said, we have to balance that with the room to improve. All right? There is always room to improve on your methodology. And there's ways to improve your methodology, your decision making, the trading behaviors that you act out day in, day out, without chasing perfection, right? And I think the best way to look for opportunities to improve your method is by doing postmortems of both your winning and losing trades. Now, you can either do it immediately after the trade is done. My advice is to do it at the end of the week. Just think of it as homework. Think of it as homework that you have to do over the weekend, where you go through your winning and losing trades. Now, remember, just because a trade made you money doesn't mean it was a good trade. And just because a trade lost you money doesn't mean it was a bad trade. A good trade is one where you followed your plan. A bad trade is one where you didn't. Right? That's why I say a postmortem on winning and losing trades is equally important, because what we're ultimately looking for in those postmortems was, did I follow my plan to the letter? That's the important thing here. Going into a little bit more detail on discipline, I think the best place to start is a personality test. You want to learn more about your personality and your unique individual strengths and weaknesses in order to identify your potential blind spots, right? We want to play to our strengths as much as possible and mitigate our weaknesses as much as possible. So again, using me as a personal example here, I'd say my greatest strength is that I'm very calm under pressure. I'm exceptionally calm under pressure. I don't really make knee-jerk emotional decisions. But the flip side of that is that because I'm so calm under pressure and because I'm quite strong at forecasting a market, I tend to want to jump in quite early and aggressively. So I have to temper that, right? And the way that I temper that is by having very clearly defined rules, a framework, if you will, about when I can trade aggressively and when I can't. And a lot of that for me personally has to do with objective measures of market volatility. If the market's quite volatile, that's when I allow myself to trade intraday. And in a non-volatile market, I adapt more of a swing trading approach, right? So I can go literally weeks without placing a single trade. And then when the market's active, I'll trade like 50 times in fairly short order. I'm just making that up. 50 is an arbitrary number. But I'll place a lot of trades fairly quickly when the market conditions meet the requirements that I have laid out in my objectively defined methodology. Now, discipline is also a skill. And like any other skill, you have to work at it in order to get better at it. Discipline isn't obviously something that only shows up in trading. It will show up in pretty much every other part of our life. Right? It'll show up in the habits we're trying to break, in the New Year's resolutions we'll soon all be making and trying to keep. And the only way you will improve your own discipline is by working on it actively. And finally, it's important to check in regularly with yourself or with your mentor or your coach. Whether it's end of the day, week or month, whatever. Ensure that you have regular check-ins to hold yourself accountable to your good trading behaviors. Did you follow your plan? Now, here's another Maverick key concept. By building your trading plan around your own personality test, you will naturally help reduce your reliance on discipline a little bit. So you want to build parameters into your plan, like I said, that mitigate your unique weaknesses as much as possible. A good example would be, if you're trying to lose weight, it's probably a terrible idea to have a bunch of high-calorie sodas in your fridge and a bunch of candy bars and bags of chips lying around. It's, you can have all the discipline in the world, but if the temptation to break your diet is so strong, you just probably will. Likewise, if you're trying to quit smoking, having, several packs of cigarettes around the house or in your car, terrible idea. Terrible idea. You're just tempting fate. You're stacking the odds against you. Okay, so by knowing and understanding your personality very well, you can then zoom out and look at yourself, hopefully with a little bit more objectivity, and start building a trading plan that helps remove those temptations as much as possible. All right, experience. This one's kind of a cliche. I know. You have to enjoy the journey with trading. The destination, once you reach it, the destination for most traders being a consistently successful trader, that destination is amazing once you get there. But there's no way around this. It takes time. There's no substitute for trading with real capital, and not just real capital, but different levels of capital. I've seen traders that are very successful trading 10K or 20K, but once you double that stack to 50 or 100,000 or $250,000 or $500,000, they fall apart. So we need to build our skill set, our ability to handle money, our ability to make decisions under pressure with graduating levels of capital. Incredibly important. That being said, there is one shortcut to cutting down that learning curve, and that is mentorship. And that is why I am such a strong advocate for Maverick, almost evangelical about this firm, because I believe our strongest suit is building a community of successful traders through ongoing mentorship and coaching. All right. Now, as a coach at Maverick, I have to say I feel underutilized by most of the traders that I'm working with, especially on the level 2 side during demo trading. A lot of the traders that I work with that are actively demo trading are not reaching out to me looking for mentorship or coaching. The ball is in your court as a trader to reach out to your mentor, to let them know what you want to work on, where you could use their help. Even if it's saying, I know I need help, I don't know exactly what kind of help I need, but I do need help. And I get it. It's hard to reach out sometimes. It's hard to admit that we need help. But I'm telling you now, reaching out to a coach, looking for that active mentor relationship is one of the only ways to cut down that learning curve and to shortcut the need to build experience through years and years and years of trading in the market. All right. And finally, it's essential to embrace discomfort. Every trading decision you make is a learning opportunity. Every trade, like I said before, regardless of its outcome, can teach us a very valuable lesson. Finally, emotional control. A steady state leads to a flow state. All right, what I mean by that is that if you can keep your emotions neutral, if you're not riding an emotional roller coaster while you're trading, you will reach that flow state where the analysis, the trading decision making, it feels instinctual. Right? I am a big advocate of meditation before you sit down to trade. I don't meditate at my trading station. I meditate literally anywhere else where I don't have access to the financial markets. I want to center myself. I want to reach a state of emotional neutrality. I don't want to be too high. I don't want to be too low. And then I feel ready to get on with my trading day. Right? So it's crucial to understand that nobody is responsible for a loss other than yourself. Nothing enrages me more than when a trader blames a dark pool for a loss, market manipulation. The central bank said this, but the market reacted this way. How stupid of the market to do that. It doesn't matter. It doesn't matter. I don't care what excuse you have. At the end of the day, you made the decision to risk your capital. There is no one responsible for a trading outcome other than yourself. I don't care if your broker went down. I don't care if your phone decided to crash on you while you're out in the middle of nowhere. You have to accept full responsibility for the outcome. That is the only way to process losses in a healthy manner. Now, that being said, losses are inevitable. It's not just accepting responsibility for loss. It's accepting the reality that losses are inevitable. We cannot have large gains without having losses. The key is to ensure that those losses are controlled. You're not losing more than you wanted to risk on that particular trade. That's why when, and I see this happen from time to time, a trader will take a large position, whether on purpose or accidentally. Maybe they fat fingered the entry and now they're stuck carrying around this big position and they don't have a good exit plan because the position's so big, they don't want to stick to their original stop. Their position size is too big to what is appropriate to use as a stop loss on that trade. And so they might get out early, or even worse, they'll hang on and let a bad trade run in their face, an over-leveraged trade run in their face and blow themselves up. Okay. The reason that happens is because they have not accepted that losses are inevitable. Now, the other side of that coin is having the mental fortitude, the emotional fortitude to accept huge wins. Many traders have a subconscious limit as to how much they think they can earn, and therefore they can't let big winners run. So for example, and again, this goes back to another talk I did a few years ago on how our childhood experiences are formative in developing our relationships with money, but a lot of us have preconceived notions of how much money we really can make from trading. A lot of us get into this business because we realize a simple truth. Trading is nearly infinitely scalable. The amount of effort it takes to place a trade that nets you $100 in profit is the exact same amount of effort as it takes to put on a trade that will net you $1,000, $10,000, $100,000, or even $1 million in profit. The amount of effort is pretty much the same. You're just pushing a button. But a lot of us, like I said, have these subconscious limits where we think we don't really deserve to earn more than $400 on a trade or $40 on a trade, whatever that number might be. And therefore, we tend to cut our winning trades short due to that subconscious limiting belief. Over the course of a calendar year, there are maybe 3 opportunities that could really make your year, where instead of collecting a $4,000 profit, you could honestly make a $40,000 or $450,000 profit on a trade. Those opportunities are rare. They don't come by often. And you don't necessarily know when they're gonna come. So the most important thing you can do as a trader is have a system in place that allows winning trades to run and run and run. And for myself personally, that's a realization that I came to many years ago when I realized that it's far more efficient as a trader to have outsized winners with steady controlled losses than to have a high number of winners, but that those winners are really small because you're too quick to take a profit, right? So we have to learn to accept huge wins in addition to being able to accept losses. And then finally, it's all about finding balance. I said this before, trading is like walking an emotional tightrope. And if you let your emotions take you on a roller coaster ride and you get too high or too low while you're trading, you will fall off. And that's where disaster typically strikes, right? That's where we see accounts get blown up rather quickly. So if you feel like you're losing your balance on that emotional tightrope, the best thing you can do is reach out to your coach, to your mentor, to somebody as soon as possible, to your spouse, to your trading friend, whoever that person is. Reach out to them ASAP, because if you find yourself teetering, it's highly likely that you're losing a sense of objectivity about your own performance. All right, so as a final review, we've covered the importance of developing your own unique, objectively definable method, of fostering the discipline needed to follow that method day in, day out, the importance of building experience and leveraging mentorship, and finally, how important emotional control is when it comes to accepting losses and wins in trading. All right, that concludes today's presentation. Hope you enjoyed it. Look forward to seeing you guys in the next class.